Welcome back. How are you guys? I hope everyone is good. So there is ARC. I'm here. ARC, ARC. I know you. I don't remember. Do I knew? I mean, I am fine. You're fine. Okay, ARC. I don't think so. I know you. Oh, Vinova. Hey, brother. How are you, brother? I'm fine. I'm very fine. Hans. Welcome back, brother. So yesterday, actually, I went to Capital. I had to something to buy. So I wasn't able to sit in front of my chart. And before going further, I mean, uh, okay, Paul, you are good too. Okay, no need to ask me. I'm always fine. Alhamdulillah, I'm always fine. Hardik, hey brother, how are you? So many people. Okay, so I think ARC is the new one, and Paul. I don't know both of you guys. I think this is your first time or something like that. Let me know that you guys can hear me clearly. So I would like to go little further, okay, about the price action. I mean, if you didn't bring your notebook, I mean, you should bring your notebook. Otherwise, I'm fine, brother. Thank you. Hi, Rahul. How are you? I'm fine, brother. Uh, okay. And I have decided that I will talk slowly because I just talk, and you guys get bored, and bored. So, okay. Thank you, Rahul. Thank you, Navo. I will go slowly today. I mean, I want to say like that. I'm just kidding. Yeah, it's my first time I can hear you. Thank you, brother Paul. Welcome, brother. So, first I would like to talk something. Then we will gossip, okay? Because I otherwise I'll forget what I want to tell. I have just reached home. I take my dinner and open my chart. I can't wait to sit in front of my chart. This is this week. I mean, uh, candle, okay? This is the weekly chart from Nasdaq and weekly chart, okay? This is the previous week candle. This is this week candle. All of you knew from my weekly analysis we were expecting lower run, and here it is. I will go step by step, okay? But before going over there, I would like to talk about something what you have to do every week. I will give you the example from this previous week. You will do from this week. Look at this candle. Just think. I'll just remove this first. So just think this is the last week candle. I have to just mark the consequent encroachment of this, not consequent, I'm in the middle, okay? I will mark this one and I will keep it until the end of the day. I mean, end of the week. So I will write down something so that I can understand this is the candle from last week middle. Okay, I will just use this. Okay, this color is good, and I will write it down. 50% of previous. I think that's good. So, okay. So you have to do this, and when the new candle, I mean the new week will open, okay? Just think this candle didn't happen yet, so this is the opening. So I will just mark the opening as well of the of this week, okay? Just think the whole of the price. This is Sunday. Just think like that way. So I will just mark the opening. So I will write it down that the opening of this week. Opening of this week. I will tell how we will use this one, okay? But I have just marked from the weekly chart, and now I will go to the 15-minute chart. So this is the 15-minute chart. I will go to the Friday price action first. Let me go to the price Friday. Here is Friday. So okay, Thursday, and this is the Friday. It's gonna take little time, okay? Because I didn't prepare yet. So from here, it's like that way. So here to here, Sunday plus here. I will go to the top and I will go to the bottom. So this is Friday, okay? Now I will mark the candles high, this Friday's high. Just remember this is Friday high, this is the Friday low. Okay. Now in Friday, after Friday, okay, in Monday, what is our expectation? Our expectation is Monday. Let me mark until the Monday. Okay, this is until Tuesday. I mean until Monday. Yes. Okay. In Monday, we will expect price will be inside this range. I'm showing you from 15-minute chart. It's because if you go to the 15-minute chart, it's kind of the reflection of the weekly chart. Just I will tell you when you have to write something. Okay. Before that, you just saw what I'm showing you. So this is Friday high. This is Friday low. I'll just move this one. To Monday. Okay. So from here to here. So that is Monday. So this is Monday now. Okay. And we have no from Friday. This is Friday high. This is Friday low. We will expect price will be inside the. I mean, in Monday, this should be our expectation that price will stay inside this Friday range. It can't go below this low. It can't go above this high. Now, if you see price went above this high, what will be your expectation? Maybe there is some relatively equal highs. Okay, I think just just think there is your buy side liquidity and price went above there in Monday. Okay, just price went above here. What will be your expectation? That price will go above, more above, and take the buy side liquidity? No. If it is Monday and you have this range from Friday, you will expect okay, price went higher, it's okay, it will come back lower again inside the Friday range. Maybe it went lower. Just think, okay, just it went lower from Friday low. Just assume there is your sell side liquidity. There is your sell side liquidity. It's very near, okay. Just let me put it somewhere here. What should be your expectation? It will go more lower and take the sell side liquidity? No, your expectation has to be it will go back to the range inside the Friday range. It can go and take the sell side liquidity, but you will never sell over here if it is outside of the Friday range. This is from Monday. Okay, this should be your expectation from Monday. Do you guys understanding? I mean, are you getting me or not? Okay, let me know because I talk like my way, the way I understand. It is not like you will understand too. Okay, so let me know if you are getting me or not. Now, this is the whole thing. You have to write it down to your notebook by your way. I mean, you will write it down so that you can understand. You can understand that what I told you and how do you expect this from the Monday price action. Overall, my the summary is price will be inside the Friday range in Monday. It can't go higher, it can't go lower. If it goes higher, it will come back again to the range. If it went lower, it will go back inside the range to the Friday range. Okay, so this should be the range bound. Okay, Abhinav, thank you, brother. I am trying to break it down so that you guys can understand clearly. Okay, now just assume price went lower, it started to go lower, it started to go lower. What will you do? You will do nothing. Every time you will not get this thing. Okay, this is kind of probability. 90% of the time you will see range bound in Monday. Go back to your chart and look every Monday how price did react over there. Okay, this is your homework. If you don't do this, if you don't go back and look at the previous, okay, let me go the previous as well. Okay, I'll just go over there. So is this Friday? Yeah. So I will mark uh, this low. This is the Friday low. Okay, this is the Friday low, and this is the Friday high. Yeah. So this is the Friday high. Now, where is your Monday? Let me mark the Monday as well. So this is your Monday start until where? Uh, 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 okay, here. So this is your Monday price action. Okay, just let me show you. Look, and watch the time. Where did I mark? I marked until 5 because after 5, I mean after 4. Sorry, where is 4? Sorry, here is 4. Okay, after 4, our session has ended. So this is 4. This is the opening. I mean 12 from to midnight to 4. After 4, I don't care because we don't take our entry after 4. Okay. Now look at the price action over here. Is it was inside the range, and at the end of the time, where what time it is actually it is 145. It went little bit higher and it stayed over there. But whole the day it was inside the range from Friday here to here. It didn't give you some kind of this run. It went higher and it started. I mean, it stayed over there. But your expectation will be it will go higher. It will come back to the lower. Now it went higher over here. After that, if you go to the 1 minute chart, if you see any kind of sell setup, you will take that because it is already outside of the range. It is going higher, higher, higher. Let me go to the 1 minute. So I would like to see is was there any I mean sell opportunity or not. Okay, then I think that will be more easier to understand. Yes, so over here, I know I'm just making it little bit complicated, but you have to understand. Okay, now look at the price over here. Price went higher. Now will you look for buy? No, you will look for short. It went higher, it came lower again. Is there any short opportunity? In my opinion, there is no short opportunity. It went higher again, it went lower, it went higher, it has taken the buy side liquidity. Now when it has taken the buy side liquidity again, maybe from here, I will look for a short now. Where is my market structure shift? Is there any market structure shift? I got this market structure shift but no fair value gap, so there is no entry. And then over here, is there any market structure shift? Yeah, you can say this is your market structure shift. Look, you are looking for short. Why? Because price went higher of the Friday high. So what you are looking for, you are looking for short. You are not looking for buy. So that there is your market structure shift, and there is your fair value gap. Just let me mark the fair value gap. I will come to your question, guys. If you are asking me anything, I'm just coming to you. Okay. So in that case, only short has happened over here. Look over here. There is no short opportunity. Nothing. No market structure shift. No buy side liquidity taken. Here, no. Here, it has taken the buy side liquidity now. Now I will look for market structure shift. There was my market structure shift, but no fair value gap. So this entry is not valid. Okay. So next time it went higher, it has already taken the buy side liquidity. I just need the market structure shift. I got this market structure shift with this fair value gap. Price went to the low of the fair value gap. I will take my short over there. My stop loss will be above this high. Just assume like that. Okay. And this low should be your target. I mean here. Just add this low. Okay. Because below this low is your, I mean, sell side liquidity. If you ask me, I will take some I mean partial below this low, and I will keep my target until here, because in my opinion market should go back into the Friday range. I will put my stop loss to the break even, maybe little bit more partial I will secure, and then I will be stopped out. It's okay. But if I take my short over there, I will take my partial below this low, and I will keep my target profit over there. I will put somewhere here. I will put my stop loss. Okay. So that is the thing. I have just shown you two example. You will go back and you will see how Monday price action actually do. Okay. Your expectation has to be the price has to in has to be inside the Friday range. Is it clear, guys, or not? Let me know. Then I will go the next part. I'll just remove this one. Okay. I think this one I'll keep, but previous one I have to remove. Otherwise, I'll be confused. What level is that? Okay, so I'll just remove this one as well. Is it clear or not? Okay. Just let me. Hello, sir. I understand. Thank you, Anna Apostolo. This technique is only for Monday with Friday high and low. Yeah, this this is not technique. This is the narrative. An apostolo. This is the narrative. You will expect price how it will react in a specific day. Okay. In Friday, in Monday, how price will react. This is the narrative. You have to understand in Monday what can happen over here. Always you have to remember that price has to be inside the Friday range. If it went higher of the Friday range, Friday high, it will come back to the range again. But if it is inside the range, we will look for another entry. Entry pattern, that is different thing. I am always showing you how to utilize the breakaway gap, everything, until it is inside the range. If it is outside of the range, you have to take. If it break the low of Friday, your expectation has to be your that market will go back to the Friday range. That means you will look for a buy over here. If it went higher of this high, you will look for a short over there. So that should be your expectation from Monday price action. And if it is inside the range, in the meantime, you will do some kind of what we always do. Sell side mark. We mark sell side. We mark buy side. Then maybe fair value gap entry or anything else. Okay, I'm just talking about the price action over here. In Monday, how do you expect? How do price will react? I hope it is clear. Oh, Vinovo, clear. Thank you, brother. Thank you. Paul, okay, thanks, Ramirez. What does it mean, brother? What does it mean, Ramirez? I'm really sorry. My English is very broken. Okay. So does the mean Mondays will always trade inside of Friday range without breaking out? No, brother. It doesn't mean that it will always react like that way. This should be your expectation. 90% of the time you will get this type of price action. I told you it can break the low, it can break the high, but if it break the high, it has to come back again inside the range again. Okay, that should be your expectation from Monday price action. Okay. If any other confusion, let me ask. Okay. Basically, yeah, Paul. Okay. Carlos Ramirez. Oh, okay. So Ramirez is another guy's name. Carlos Ramirez. If I just pronounce your name mistakenly, wrong way, I'm very sorry, because you know what what I mean. I'm my English. Okay. So okay, Carlos is clear. Thank you, brother. Hardik, thank you, brother. That's okay. No problem, brother. Okay, Paul. Assignment for me to backtest this Monday. It's not for your assignment, Paul. It's the assignment for everyone. Whoever will skip this, you will lose, because when you will go back, you will see sometimes price break the high, it started to go higher, higher. Okay. And sometimes you will see price never break the range. Sometimes you will see price break the high, it came back again into the range. So you not only look Nasdaq, also you have to look the E-mini S&P. Not only the Nasdaq. I'm giving you the Nasdaq example, but you have to look the E-mini S&P as well. Okay, because sooner I will shift to E-mini S&P very soon. That's why I'm telling you this. You have the, because then I will talk about the E-mini S&P and you will. Okay, I got it. 90% though. Paul, 90%. Ah man, sorry. I don't know what is your confusion. Price has to be inside the Friday range. But if it break the high, it will come back again to the Friday range. That should be your expectation. If it breaks the low, it will go back to the range again. That should be your expectation. But price can go lower, lower, lower. Okay. If it goes lower, 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 there is nothing to do. We will just see the price. We will not expect any kind of entry over there. And whenever price will be inside the range, we will look for our entry. We have another entry opportunity. I mean entry technique. Okay. Every day I am showing you how to take entry. I mean you all know. Okay. So that is different thing. But this is what I am talking about here is how do you expect price will react in Monday. In Tuesday, in Monday, there should be different expectation. Okay. That is the thing I am trying to tell you. You don't just think about entry. Don't think about entry. I'm telling you nothing about entry over here. This is all about the price action. In Monday, how do you expect the price? This is the theme of today's live streaming. Okay. Is this in ICT concept? Obviously, this is ICT concepts given then. Whatever I'm telling you here, this is ICT concept. Except the macro, I'm just repeating this again related of my intention. This is all ICT concepts. Okay. Uh, Whatever I'm just telling you, this is ICT concept. I mean ICT. I learned this from ICT. Okay. Yes. Okay. Okay. Understand now. Thank you, Paul, for understanding. Got a question. How do we use the 50% previous week? Ah man. Uh, I will tell you everything, Carlos. Just wait. I will tell you. I just marked it, so I will tell you. Don't worry. Just be patient. So we two types of Monday. One is Monday stay inside Friday range. Second Monday price with Friday high low. Is that starting of something else because reverse from mean work 90% of time in Monday. Abhinav, the thing is price can react is at any way. I mean I'm telling you the thing is your expectation should be Monday price action will be inside the Friday range. Monday price action has to be inside the Friday range. That should be your expectation, and we will react with the price. How price will give us the information, we will react with that information. But that should be in your mind that market won't just straightly go up. It will go up. It will go low. It is not your expectation from Monday. In Monday, this is called accumulation. I mean, price will be accumulated some liquidity over here. Okay, that should be your expectation from Monday. Carlos Ramirez. Okay, okay, brother. Just wait. I will tell everything. Don't worry. So that is from Monday. Now I will go to Tuesday, and I'm just moving my highs. Okay. So this is the high from Monday. I mean, this is the high from Monday. I don't care about Friday anymore. I mean, this is for your understanding. Okay. And this is the low from Monday. This is the low from Monday. Okay. And I'm just moving my this one to Tuesday. Okay. So this is the end of the Tuesday. This is the opening of the Tuesday. Okay, sir. Alayhi alhamdulillah. So this is the high from Tuesday and this is the low from Tuesday. Let me just mark it. Okay. Okay. Now in Tuesday, our expectation will be it will be manipulated. I mean it will make manipulation. What did it manipulate? Mami, steaming kori. Please bolo. Does it happen only in indices or with forex too? This is for forex as well, Paul. This is also for forex. Whatever I'm telling you in about forex is forex doesn't give me the precise price action. Okay, brother. I mean I don't get some kind of precise price action from forex. That's why I'm just trading indices right now because In indices you will get tick by tick information. Okay, that's why I'm just still I'm trading right now in indices, I mean the future. But when forex will be in its previous position, all not only me, ICT also will go back to forex again. Right now forex has some kind of big manipulation, something like that. Okay, so this is the high from Monday, this is the low from Monday. In Tuesday you will expect some kind of manipulation. What does it mean? It means it will take both low and high from Monday. This is Tuesday's price action. Okay, guys, first thing, I mean, don't think you will get this always. No, brother, you will never get this always. Sometimes you will see some weird price action. Price even didn't take the Monday's low or Monday's high, it started to consolidate inside the range. It can happen. Whatever I'm telling you here, 90% of the time you will see this. Okay, look, this is Monday's low. What price did? It went lower. It has taken the Monday's low. Now, what should be our expectation? Monday, I mean, the price will go high and take the Monday's high. This is called manipulation, and we expect this manipulation from Tuesday. Now, just think, okay, price was over here from Monday, Tuesday, and it started to go higher, and I mean, it went above the high. What should be our expectation? Just think, okay, it went higher. Now, what should be our expectation? Where will be our next target? Monday's low. Monday's low is our next expectation. Why? Because it will manipulate the market. In Monday, we got the accumulation. Now, this is the manipulation. In Tuesday, we actually expect the manipulation. So, what price did? It went lower. It has taken the sell side liquidity from Monday's low. If you were with me in the live streaming in Tuesday, I told you that in Tuesday it has taken the sell side liquidity, so it has to take the buy side liquidity. That should be my expectation. Now, maybe just think, okay, you take your entry over there, buy entry. Will you hold your trade until here? No, you will just take a small portion of the move. Your expectation will be market will go higher and take the buy side liquidity, but you don't know where market will go. Market will give you the move, and you will take some bone, I mean, take some meat from the bone. Okay, it is very easy, guys, try to understand. First, what should be your expectation? How price will react in Tuesday? How price react in Monday? That is the theme of today's, I mean, today's live stream. If you know how price will react, like it went lower, now you don't know how price react in Tuesday. How do you know? It will reverse from here or it will go lower. Yeah, it can go lower, but 90% of the time you will see when it has taken the low, I mean sell side from Monday, it will go toward the buy side. Should I go to previous week? No, you will go. You will go and check. Okay. Tuesday price took both high and low of Monday. Right. Yeah, that's the thing, brother. That is the thing, Abhinav. And Paul, do you suggest I do my back test on indices? Paul, if you ask me, I really love indices right now. It's because I get the precise price action. I mean, tick by tick. If I put my stop loss somewhere here, depending on my price action, it will never stop me out. But I show all of you what Forex do. I mean, it has no limit to manipulation. If you just take a entry over here, your stop loss has to be here, somewhere here, and your profit target should be there somewhere. This is my opinion. I'm not telling that it is untradable or something, but this is my opinion. In my opinion, I really don't understand where I should put my stop loss, because I get manipulated so many times in Forex. I mean, I'm talking about paper money because I didn't take real money entry after 2021 in Forex anymore. So I'm just telling you about the paper money. So that is why I'm afraid of Forex. I don't know how to trade Forex right now. This is my failure. I'm not telling you that you can't trade. You can trade if you understand. You can trade, brother. But in my opinion, I don't get the precise price action from Forex. That's why I moved to the indices. Not only me, but also some. I mean, uh, who are actually who do understand the price action, they all move in indices. Like ICT himself also trade indices, and yeah, he trade the forex as well, but paper money, not the real money. Okay, so this Abhinav's question is also mine. ARC, Abhinav's question is also yours. Okay, what is Abhinav's question? Tuesday price took both high and low of Monday, right? That is right. Tuesday's price action will take both high and low of Monday. That is should be our expectation. But look over here, it has taken the sell side liquidity, then went higher. It is showing us that I am going to take the buy side liquidity, but it failed. Do you think, or do you think you will get at least one entry inside this run? You will go toward the buy side. It will take the buy side or not, I don't care. But it will go toward the buy side. That should be our expectation, okay? And what is the last part? For Tuesday highs and lows. Uh, for Tuesday's high and low. Tuesday price will take both high and low of Mondays. No, 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 no. Okay, I got it. I got your question. I marked this is, look at the high. It is Monday's high. It is the Monday's low. So in Monday we will mark Friday's high and low. In Tuesday, today is Tuesday, okay? Okay. So I'm just telling you the basic. You will do it by yourself. If you see equal lows, you will mark the equal lows instead of marking the Monday's high or Monday's low or Friday's high, Friday's low. If you see equal lows or equal highs, you will mark them, okay? So in Tuesday, you will mark Monday's high, and to understand the concept from Tuesday, I will go to Wednesday now. Okay? If you understand Tuesday clearly, if you have no question, I will go to Wednesday now. So this is the Tuesday's high, and this is the Tuesday's low. Okay, let me know faster, guys. I will go to Wednesday. If you have any question about from Tuesday, I will repeat. I'll try to give you the answer, but let me know first that you have no question anymore. Tuesday is clear. Thank you, Vinabo. uh, in the meantime, can I ask you guys one favor? And I can see there's like 16 people. Can you guys give me some like? I need some kind of like so that it will be helpful for the YouTube algorithm. If you think it is okay to give me a like, then okay. Otherwise, it is what it is. Okay. So now I'm in the Wednesday. Okay. So after Monday, Tuesday, now I'm in the Wednesday. Now this is important for me. What is this? This is the 50% of the previous week, and this is the opening of this week. Okay. If you see, okay, yeah, a rule about Monday and Tuesday. What is that, brother? What is your first word? If there is a rule about Monday and Tuesday. Yeah, that is the rule. I mean, that is not rule. That is, yeah, you can see that is the rule. I mean, that should be our expectation. That should be our narrative. But how you can easily trade that? I mean, it should be easier. Okay, so I don't know what to say. I mean, you have to understand how price will react in a specific day. So that is the thing. Okay, already done that, bro. Okay, no problem. So you guys are liking my concept, I mean my teaching or sharing my understand whatever. Now it is now important the 50% and the opening. Why I marked this? You have just opened your chart in Monday is sorry, to Wednesday, okay? And let me just mark the 9:30. So this is 9:30, okay? So this is 9:30, and you have seen that market is already below the 50% and also the opening gap. Just write it down clearly, okay? Below the both 50% and the just give me a second, okay? I just need to give a message. Just a second. Okay, I'm back. If you see the market price is just below the 50% of the previous week and the opening of this week, if it is below both of the level, your expectation will be it will go lower. That should be your expectation. If you see after 9:30 prices above the 50%, both, okay, not above the, I mean below the 50% but above the opening, that is not the case. Okay, it has to be above the 50% and both, I mean opening of the week. If you open your chart and you see prices over here, okay, prices over here, just both above both these two level, your expectation will be price will go higher. This is the common rule, okay guys. So that should be your expectation. Is it clear or not? If it is clear, then I'll go furthermore. Just let me know that it is clear, okay? Isn't clear because the connection come and go and I didn't get it, sir. And Apostle, you didn't get it? Paul, I actually don't, I mean, I don't rate my win rate on indices or anywhere, okay? There's something, if you are with me for a week, then you will understand why I told that, okay? Because rarely you will see losing trade. That's the thing. I don't do that. Okay, whatever. And Apostle, why it is not clear, brother? In Tuesday, our expectation will be it will take both buy side liquidity and sell side liquidity from Monday. That is our narrative. Okay. Okay, Rahul. Thank you. Thanks for replying me because I need your reply. Otherwise, I don't know you are getting it or not. This is Wednesday. Okay. Do you have Instagram, brother? I want to follow you. Given say you can follow me over here, brother. No problem. I have Twitter. I have this one. I will talk about that later, but let me just make it clean again. So this is the Wednesday. This box. Remember, this box is the Wednesday. I mean, this is the starting of the Wednesday, and this is the ending of the Wednesday. 12 to 4. You remember this level? This is the 50% of the previous week candle. This is the opening of this week candle. Let me go to the, I mean, weekly candle again. Look, this is this level is 50% of the previous week candle, and this level is the opening of this week. Okay, so just remember these two levels. Now I'm in 15-minute chart. Think today is Wednesday. After Tuesday, today is Wednesday. I have marked the low. I have marked the Tuesday high. Or if you see kind of, I mean, equal highs, equal lows, you will mark them. Okay, and what if price open middle of two level. Obinobo, I'm just telling you the thing again. I'm just again telling you, okay? Here is the Tuesday high, here is the Tuesday low. This you open after 9:30. This is 9:30. Okay, this blue line. This is 9:30. Look, this is 9:30. I have just marked it. After 9:30, you saw that price is over here. Price is over here. Where is it? It is above both 50% and the opening. Look, both of them is above. Your expectation will be market will go higher. That should be your expectation. Now you have just opened your chart after 9:30 and you saw prices over here. Okay, prices over here. So it is both lower of these two level. Your expectation will be market will go higher. Now you opened your chart and you saw prices over here. I mean, I mean inside the range. I mean inside of these two level. Just over here. You will wait to show you the price where it would like to go. If it would like to go, it will break the high. I mean, here it will break it, and all of you know what I mean by break. Break means I need a body close above this level or here. I mean, look at this candle. Oh, it will just break the low. I mean the lower level. Okay. If it can break the lower level, that means it is below the both level. If it go higher and break over there higher level, that means it is above the both level. I mean this both level. It is higher of the both level. So it will go higher. It will, if it breaks lower, it will go lower. Is it clear or not? Let me know. Hi Domino, you're late. You're late, brother. Do you have okay? Given then, I'll just talk about that later. It if it is not clear, let me know. I will explain again. I am not tired, and I will never be tired to explain you guys again and again and again. But I need to know that you guys got the, I mean, concept. It is clear or not? Let me know first. If you late to give me the reply, that will be harder for you because you have to stay more time to complete this thing. Okay, that's only for Wednesday. Yeah, brother, I'm in Wednesday. I'm telling you, this is Wednesday price action. I'm just telling you Wednesday when I will go. I have already told talk about the Tuesday. What should be your expectation from Tuesday? I told about that. What should be your expectation from Monday? I told that. And now I am in Wednesday. So I'm talking about only Wednesday. I'm not. I didn't go to the Thursday yet. I will go over there. Just let me, give me some time. Okay. First, let it be finished. Okay. So we have three level to determine where price will go previous week. Percent income Tuesday 50%. Why Tuesday 50%? I mean, why Tuesday 50%? From Tuesday, I will mark the Tuesday high and Tuesday. Every day, I will mark the previous day's high and previous day low. But if I see kind of equal highs, I will go for that equal highs. If I see the equal lows, I will go for that equal lows. Okay. So I don't need the 50% or something. I need the 50% from weekly candle. Previous week 50%. That's all, brother. Well, I don't have anything. I have only Twitter and uh, I'm active in Twitter and the YouTube. Everywhere else, I'm not active. Guys, let me know that you guys got it because I have a lot to talk today about the price action. So I need to go first. I have just come after near about 7 hours journey. I'm a little bit tired, but I have to talk about this. Okay. Abhinav, what Abhinav? I told you that you have to mark the Tuesday high and Tuesday low. But if you see the relatively equal high or equal low, you will mark them from previous price action. Okay. I mean, if you see the very clean highs or very clean lows, you will mark them. Otherwise, you will mark Tuesday high, Tuesday low. Okay. And another two level, this level comes from weekly candle. This is the weekly candle, previous week candle 50%. This is the this week opening. This is the this week opening. Okay. If you see price open below the both level, it will go lower most of the time, not 100% of the time. Oh, guys, just most of the time you will see that it will go lower. If you see it opened above the both level, it will go higher. If you see it is inside these two level, then you will wait until it shows you where it would like to go. That's the thing. Okay. I don't know, brother, what is Asian kill zone. I don't know. I don't actually see the Asian zone or anything about Asian. I just try to make things I mean simple. This is very simple, and this is the thing I don't even need to mark. When you will be used to with this, you will never mark this one. Trust me. But first, some days or maybe 1 2 weeks or month, you have to do this every day. Otherwise, you will forget. You will forget if you don't write it down. This is all very important, and when you will be used to with this, you will understand that it is, I mean, consciously you will get this thing. I mean, you don't need to, you won't be need to mark the 50% or the opening of this week. Okay, so that is all. Okay, so we need to look for new week opening gap and Abhinav, when did I talk about the new week opening gap? Brother, this is not new week opening gap. This is the opening. This is the opening from this week. This is the opening. Oh man, let me show you again. It is not hard. Try to think. I mean, look, this is the opening of this week. This is the level of the. I write it down. Opening of this week. This is the opening level of this week. This is the 50% of the last week. If I mark the 50% of this week, look, this is the 50% of that week. If I mark the 50% of this week, that should be the opening of that week. Okay, so this is very, I mean, why it is so complicated? Yeah, opening, yeah, this two level I marked it when I have just started my stream. You are from the beginning, right? So I have just marked the opening of this week and the 50% of the last week. And you guys are referring me some 1 hour, 4 hour chart, something like that. Please don't do it, okay? If I don't talk about 4 hour, why do you refer me to 4 hour? I told you that if it is important, then I will tell you. I mean, in my opinion, I'm not telling you that please don't use 4 hour or I mean any other time frame. You can use them, but please don't refer me, okay? I know what I am doing. Please don't refer me any other time frame I don't talk about. Please don't do it. Hurts. So in Wednesday, we actually expect the expansion. I mean the distribution. That means one-sided price action. It will go one-sided. And let me just check the actually. Okay, that's the wrong. Okay, okay. No. I think it's clear, Abhinav. You got the point or not? Let me know. Okay. You're doing great at marking clear, making this clear. Uh, thank you. You are most welcome. Brittany T. You are also new today, right? Because I didn't see your name as well. Do you consider weeks or the full candle? Sorry, late. No problem, Domino. Full candle. I mean, just think this is what can I say? Just let me think. This is the previous candle week. Okay, just think week candle. So you will mark the low. You will mark the high. This is the 50%. I mean previous week's 50%. Very simple, guys. Very simple. Don't make it complicated. Very simple. Is it clear? 100% clear or not? Let me know. Okay. If it is 100% everything clear, thank you, Anna. Puspula, thank you for letting me know that it is clear. If you don't get it, I will repeat again and again and again until it is not clear to you guys. So that should be our expectation that market will go lower or go higher. Okay, it will go higher or it will go lower. I don't know. I really don't. 90% of the time you will see it happens. 10% of the time it is exceptional. Okay? So you have to understand the thing. Okay, Hardik, thank you, brother. Now, when the Wednesday is clear, I will go back to the Tuesday again. Okay, I mean, mm, I will go back to the Tuesday because I forgot to tell something. I'm sorry, but I forgot it. If you remember, this is the Mandelo. I'll just mark the Mandelo. Just think this is the Mandelo and this is the Monday high. Okay. Now, if you see in Tuesday, actually our expectation is the price will take both Monday low and Monday high. That should be our expectation from Tuesday. But you saw price actually failed to take the buy side liquidity. Instead of that, it went lower. And if you see this type of price action, if it don't take the, I mean, liquidity, okay, I mean it failed to take the buy side liquidity, it went lower and it started to go lower. After clearing the sell side liquidity, it didn't go back higher to take the buy side liquidity. Just think like that way. It failed to take the buy side liquidity. Instead of that, it went lower. When it has taken the sell side liquidity, it continuously to go low. That means expansion. If you see the expansion from Tuesday our expectation is manipulation. That means it will take the sell side liquidity and the buy side liquidity. Both of them it will be taken. But if you see it didn't do the manipulation, instead of that you saw the expansion. Okay, when it will continuously go lower, then this is not like that. Okay, so you have to be careful about this thing. Please write it down. If you don't see the manipulation in Tuesday, instead of that if you see the expansion in Tuesday, you have to be careful rest of the day of that week, because most of the time you will see the consolidation or something like that. Okay, am I live or live has gone? Look like internet issue, so you guys can't listen to me. Yeah, I know. I have nothing to do. I have changed my internet connection, I have changed everything. Still now I'm just facing the internet problem, so I don't know what to say. You guys have to forgive me. Okay. Okay, I'm live. Thank you, Vinabo. Rahul, I'm really sorry, brother. I'm just repeating this again. Okay. In Tuesday we actually expect some kind of manipulation. That means it will go lower and take the Monday's low, it will go higher and take the Monday's high. This should be our expectation from Monday. I'm sorry, from Tuesday. Okay? Now, if you see price failed to take the buy side liquidity, instead of that, it expand lower. After taking the sell side liquidity, it continuously go low. That means this is expansion. This is not manipulation. This is manipulation. Right now, what happened over here? This is manipulation. But if it started to go lower, that is expansion. If you see the expansion instead of the manipulation from Tuesday, rest of the day of that week you have to be careful, because most of the time you will see some kind of consolidation, more manipulation, something like that. Okay, so you have to be careful. That was the thing I missed. Okay, is it understandable or not? I mean, can you guys literally can't hear me? I mean, if it is very hard to understand, then what should I say? I don't know. So I think so far you got the whatever I'm telling over here. I didn't say anything, Hardik. I'm sorry. I didn't say anything yet. So whatever I'm telling in Wednesday and Thursday, it will be worked if Tuesday you got the manipulation. If you don't get the manipulation in Tuesday, whatever I'm telling you over here, it's not. I mean, you can't expect like that way. Okay, whatever I'm telling you in Wednesday, Thursday and Friday, whatever I'm telling you here, it won't be accepted if I don't see the manipulation in Tuesday. Literally, in Tuesday you will see kind of the high of the week or the low of the week. If your expectation is this week I will get some kind of bear run, I mean the lower run, then you will see the highest high of that week in Tuesday. If you are expecting that market will go higher from your weekly analysis, you will expect the lowest low will appear from Tuesday. Okay. Actually, last week we didn't get the manipulation. All of you know that our expectation was market will go lower. So it has to take the buy side should happen. But it failed to take the buy side liquidity from Monday. That is one of the most reason for, though it was like it went lower with our expectation, but all of this sloppiness, all of this, I mean, bad price conditions happened because it failed to take the buy side liquidity. If price failed to take buy side liquidity and expand lower, we have to be careful for rest of the day and week. Yeah, that is the thing, Abhinav. Absolutely, that is the thing. I mean, you have to be careful. Look over here. From our weekly analysis, we knew that market will go lower, but it failed to take the buy side liquidity from Monday. Okay, and when it has failed to take the buy side liquidity, rest of the day and week we got this sloppiness. No clear price action, though there was so many news, but price action was shit, like shit. Okay, man, I think I should stop the streaming because the internet issue. Let me just check it. But it's green over here. I mean, if it is green over here, then it shouldn't be so many. I mean, buffering. It shouldn't be like that way. I'm not sure you guys can hear me or not, or it is good or not. But it should be okay as far as it is green over there. Whatever. I will continue. Okay, Hans, thank you for confirming. I didn't see over there. I mean, in yes, but I'm just giving you the example from Nasdaq, and from Nasdaq, uh, we can see this type of sloppiness. This is one of the, I mean, reason. Okay, so you have to be careful about this. I mean, Tuesday is the most important day of the week. You have to understand you have to predict the whole week price depending on Tuesday. Okay, guys, I think it is clear. Can you guys hold for 3 to 4 minutes because I need to check my. I mean, I can't connect anymore. I need to check my internet. I mean, just give me 3 to 4 minutes, okay? I will check my connection, please. I'm sorry. I suggest answers to hear you tomorrow. We can watch it again. You ask us if something isn't clear, and then you need to answer. Yeah, Apostolo. Yeah, it's a good idea, but actually tomorrow I have to. I was thinking that I will go for the. I mean, the weekly analysis. I mean, this weekly analysis, but for describing this, I was needed a close market. That's why I thought today I will do this. But you guys can check this later. I mean, later you can check it if you don't understand anything. I mean, I don't know how to fix this internet issue, guys. I'm from a developing country. I mean, I'm in Bangladesh right now, so we actually face the internet. I'm extremely sorry. I will go back in Portugal where I don't know. Just give me 2 to 3 minutes. I will just check my internet connection. Okay. I'm very sorry. If you listen to me, just give me 2 to 3 minutes. Okay. I'll just check my connection and I'm coming back. I'm sorry. I'm very sorry. I'm very sorry. I'm very sorry. I just let them know that the internet issue, and they told me that they will fix this, but I'm not sure that they will fix it or not. Kind of what to say, I don't know. You guys are, I mean, you guys are choosing a wrong guy. I have a lot of problems. Internet issue is one of them. So I'm extremely sorry. Hope you will accept my apologize. What to say, I don't know. So for whatever where I was, I forgot. Guys, what I understand. Oh, yeah, Hans, you are right. That's the thing, brother. There's no way to retweet this, so I am just replying the Hans comment. That is this whole I mean, whatever I'm telling you here over here is narrative. Okay, this is not precision. This is not precise price action. This is the way you will accept price will act in a specific day. Okay, so please don't think it will work 100%. Whenever you will see prices below both of the line, it will go lower. Don't think like that way. You will expect that market will go lower. That should be your expectation. When we will be in 1 minute or lower time frame, we will wait for more precise price action. Then we will act for our entry. Okay. If you have the idea how price can react, you can easily be confident when you will take your entry. Otherwise, you will be confused that market where market will go after a certain level. Where can market go? You will get that. So this is the narrative. I don't know you guys understand what narrative means or not. Narrative, in my opinion, narrative means in a specific day how price will act, where it should go, in Tuesday how it will react. Okay, so if you can remember all of the thing, it will be easier for you to, I mean, to mark your buy side or sell side. So this is the thing, guys. If you have remembered, I have marked this as my buy side liquidity, and I was expecting this was very clean high. Okay, I was expecting that market will go higher, but it was lower the both of the level. That's why market went lower instead of going higher and taking the buy side liquidity. Next week, I will wait to take this buy side liquidity next week. Okay, that is another thing. I will talk about this tomorrow, but today I'm just talking about the narrative. Rahul, thank you, brother. Yeah, I was in. Want to thanks for reminding me, guys. A question: 50% previous was better. Whole week. It Carlos, this is the whole week range. You will go to the weekly chart. From weekly chart, you will mark the 50% of the previous week. This is the previous week candle. Okay, you will mark the 50% of previous week. Look, I'm just putting my Fibonacci from the low to high. This is the 50%. So you will mark whole week 50%, not Friday or any specific days. I hope it is clear now. So I was in Wednesday. So I hope Wednesday is also clear. If it is not clear, let me know. I will explain it again. But I will go to the Thursday now. If it is not clear, let me know. I will explain it again. So this is the Thursday, and I will. I just need this. I don't need this one anymore. This low and this high. I don't need that. Wednesday and Thursday, we actually expect the expansion. That means if it start to go lower, it will go lower. If it start to go higher, it will continuously continuously it will go higher. Okay, that is the expansion means. So Wednesday and Thursday, we actually expect the expansion. Now this is Thursday. Where is price now? Below the both level. If you see the price below the both level, where should be it, I mean, which direction it should be go. Oh, what is the English, man? Oh, if you see the price below the both level, your expectation will be it will go lower. I hope it's clear now. I mean, this time I use the right verb, right everything. So if you see prices above the both level, your expectation will be it will go higher. But most of the time in Thursday, you will see price will stay either below or above from both of the level most of the time, because from Wednesday we actually got the first run of the expansion, and Wednesday Thursday we actually continue the run. Okay, so in Thursday our expectation will be it will go lower, as we saw we got a lower run from Wednesday downside. That, yeah, you were right, an apostola. That was the word I was trying to explain. So in Thursday, actually, we don't have anything to say about Thursday price action. This is the continuation of the expansion from Wednesday. Most of the time, I mean 80 to 90% time, you will see this is the continuous run. Okay, and if I just mark the 9:30 opening, this is the 9:30 opening. Yeah, here is the 9:30 opening. Then it went higher little bit. It has taken the buy side liquidity. This is the setup. Okay, this run is for setup. So this whole run, you see, whole week, it tried to go higher, failed, then it started to go lower, and finally it came here. I mean, at 4, before 4, it actually went lower. So we will wait for some kind of price action to the lower time frame so that we can take the short. As from Wednesday, we saw that market actually went to lower. Whole of the price action will depend on the Tuesday price action. As we can see, it failed to take the manipulation. Instead of that, it went lower. From our weekly analysis, we know market will go lower. So if our analysis is telling us that market will go lower, in Tuesday it should take the buy side liquidity, because in Tuesday we are expecting the high of the day, as our analysis is telling us that market will go lower. If our analysis, weekly analysis, is telling us market will go higher, then at Tuesday we will expect the lowest low will happen in Tuesday of the weekly candle. Okay, but it failed to make the higher high, I mean the highest high of the week in Tuesday. That's why our expectation has to be the consolidation rest of the day of that week. In I mean the Thursday, our we will expect the lowest low, I mean the lower low or the lowest low, okay, of that week. If you expect the highest high in Tuesday, in Thursday you will expect the lowest low in Thursday. If you expect the lowest low of the week in Tuesday, in Thursday you will expect the highest high of that week. This is how you will expect the price action. If you didn't write it down now. This is the whole thing. This is the narrative of every specific day. Okay, last week I just gave you an introduction about a specific day, how price will act, and this week I'm just giving you second step, you can say second step of the narrative or the price action. Is it clear or not? Let me know. From Thursday, actually I have nothing to do, nothing to say in Thursday. Thursday, one thing is it will be continuous run from Wednesday. If you saw the lower run in Wednesday, in Thursday you will expect it will go much more lower. If you see the higher run in Wednesday, in Thursday you will expect the continuous higher run in Thursday. Okay, and Thursday it will typically make the highest high or the lowest low of the week. Either of that you will get in Thursday. In Tuesday, same thing. You will expect the highest high or the lowest low in Tuesday. What do I mean by that? Just think this is the weekly candle. Okay, this is the weekly candle. Just think this low will appear. I mean, it will create in Tuesday. Either you will see it has created in Tuesday. If you see it has created in Tuesday, then this should be created in Thursday. Or if you see this high has created in Tuesday, then this lowest low should be created in Thursday. That should be your expectation from Tuesday and Thursday. Got you guys? Is it clear or not? Let me know. Let me know. I would like to know you got my point. If you get my point, then I will go to Friday. All of this thing actually happened. It's the only reason, in my opinion, it failed to take the buy side liquidity. Either instead of that, the manipulation, we got the expansion in Tuesday. But we actually expect the manipulation first, then the expansion. If you see this type of run, the whole week you will expect some kind of consolidation. So everything depends on, in my opinion, in Tuesday. Summary on mark the high and low of the week. Find the 50%. Uh, brother, ARC, there is one thing, and that is you don't need to mark the high and low of the week. I mean, you don't need to mark the high and low of the week. You have to mark Friday's high and Friday's low for Monday's price action. You have to mark Monday's high and Monday's low for Tuesday's price action. You have to mark Tuesday's high and Tuesday's low for Wednesday's price action. In the meantime, if you see kind of equal highs or equal lows, you will go for that instead of marking a specific day's high. Okay, I mean, if you just see this high from Monday, this high from Tuesday. Okay, if you see they are relatively equal high and it is little bit higher than Tuesday's high, just think it appeared over here. It has just opened here. Okay, so I think, just think this is the Monday high and this is Tuesday's high. You will mark this high. I mean, oh, and you will mark this high as your higher high because they are relatively equal high. Okay, so that's the thing. And the price below 50% expected peer run, yeah, not only 50%, both 50% and opening, not only the 50%. Remember, not only the 50%, the 50% and the opening of this week, both of them. It is important to write it down. Both of them I need. Okay, previous week is created bull run, yeah, that's the thing. But you have to just look at the 50% and the opening, both of them. Mark the maximum minimum of the day every day to check the bias. Okay, I mean, it's a little bit not bias, it's not for bias actually. uh that is actually, you can say bias, you can say it, because if you use the 50-minute only, then you can say, you can use the bias word. And of Friday, okay, what is our expectation? Monday or Sunday? Monday, brother. I didn't talk about anything about Sunday. I mean, you, if you would like to mark your opening, you will go to the weekly chart and you will mark the opening. You don't need to go every single day, okay? You have to go to the weekly chart to mark the opening. I didn't talk anything about Sunday. Nothing. I mean, Sunday actually we use the Sunday open for our price action. That is another level. I will talk about that later. But right now, just this is important. So I would like to talk about this. So what should be our expectation from Friday? Okay. Now look at the price action over here. It went lower, 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 expansion lower. Okay. This is kind of weird. Actually, this shouldn't be our price action. Instead of that, we should expect it will go back into the range. I mean the high and the low until Thursday. Okay. You will go uh, from Monday to Thursday. Monday to Thursday, you have to mark the high and Thursday low. Just let me mark. Okay. Just think this is the Monday high. This is the Monday high. Okay. Just think like that. This is Monday high. and this is the Monday, I mean Thursday's low. This is the Thursday's low. In Friday, you will expect price will go back into the range. It will go back into the range. Instead, it went lower, but actually that should be our expectation in Friday. Very important, guys. Try to understand. You saw that market went lower. Okay, this Friday it went lower, but our expectation has to be market will go back in inside this range. The high, I mean the highest high. Okay, whatever you will see from Monday to Thursday, you have to mark the highest high and you have to mark the Thursday low. Okay, Thursday low and the highest high. Friday price action has to be inside this range. It will go back inside this range. That should be the, yeah, absolutely. Yes, absolutely. PO3, right. We will expect that market will go back into the range. That means it is kind of PO3 perfectly. Thank you, brother, for reminding me. It's PO3, okay? But this is the exception, and you have to be careful about this yesterday. If you were with me uh, in Twitter, I uploaded a short and I told you that 16660 will be killed. How did I know that? That 166, why is that level? Let me check. Okay, here. I told you that this will be killed. Let me, this low and this low, okay? They're relatively equal though, and the level is 16660. I didn't mark it perfectly, so it's little bit maybe one to tick. I mean up down, it can be like that way. When I have seen it failed to go lower, I mean inside the range, instead of that it started to go lower and made this equal lows. I was pretty much sure that market will go lower and take the liquidity. Every time I saw the equal lows, equal highs, it helps me to mark the liquidity. I know some of you guys sometimes message me, I will mark the London session high, previous week high, previous days high, that high, those high. I don't go for that as my liquidity, okay? My liquidity is always equal highs, equal lows, relatively equal highs, relatively equal lows. You see this high and this high, they are relatively equal highs. Let me mark it. So this why it is, so look, this high and this high, they are relatively equal high, okay? So I will mark them as my buy side liquidity. I know market will go over there and it will take the buy side liquidity. When it will go, I don't know. I will depend on the price. When I will see that market is willing to go toward that buy side liquidity, I will take my buy. Now, in that case, if you guys remember, I when I uploaded my video, I took, I mean, I took this entry over there. How did I know that market will go lower? Let me go the 15 minutes at first. So, no, I was in 5 minutes. Sorry, 5 minutes yesterday. I forgot. So when I have seen that it has taken the buy side liquidity, I mean, let me mark the buy side liquidity. This is the relative equal high, so it has taken the buy side liquidity. Got my market structure shift over there. This market structure shift, and market has actually made the. Just let me mark them. This is from 15 minute. You don't 5 minute, but you don't need to come here because I'll talk about them all. But right now I gave you the 15 minute chart because that is much more easier for you guys to track the, I mean track the price. Okay. So what I told you about these things, if you remember, if you ever see two gap one above another, you has to be use that thing. Okay, it is kind of thing. I saw 90% of the time it works. Okay. But if you see there is only one gap, no two gap, okay, just one gap. One of the guy actually asked me the question to my YouTube. So far, I remember that if we don't see two gap, on the other hand, if we see the one gap, what will you do? What will we do? You can take the entry over there, but in my opinion, there should be a risk that market can go above again and take the buy side liquidity. Then it can make some kind of setup. Okay, but if I see this type of two gap, okay, perfectly two gap, I saw 90% of the time this gap used as a breakaway gap, and market actually went to the first gap, then it take the liquidity. Okay, so this is for confluences, but I actually didn't want to talk about this. My topics was about the narrative, how you will expect price will work in a specific day. Okay, so Friday market should go back into the range, that should be your expectation. But if you see some kind of price action that is clear, that is clearing you that I would like to go lower, then we will act toward that. Okay, that is different thing. But your narrative, this is your narrative. Market has to go back into the range. Okay. Hey, Darius, I mean Open Heart Ministry, how are you, brother? For Wednesday, do you only check the body close on the 50-minute chart above or below the 50 or something? Because there are 1 minute body close above the 50 and opening week lines. Uh, if you see, go to the 15-minute chart and the Wednesday. So after where is Wednesday? Brother, it's kind of thing is the body close. I mean, it was at the London session, but after London session, I think there was no body close above this line as well. But the thing is, I really don't want to talk about the body close or break. Okay, kind of things. If you see the perfect price, okay, after 9:30 you saw price is over here, and it is clearly telling you that I would like to go higher. Then you will expect like that way that market will go higher. Then you will go to the 1 minute chart and look for a entry. If you see market is below the price, this is not perfect. Okay, I'm not talking about this. I'm talking about something like here. Look, this is the Wednesday, though this is Thursday, but I'm talking about like this. Okay, price is clearly below the both level. It is clear, right? Do you have any confusion that market is below these two lines? There shouldn't be any confusion. If you see this type of price action, which is actually below the both line, then you will expect market will go lower. Just try to avoid this type of price action when you will see it is inside the range. It's better to avoid this when it is your, I mean, the first stage of learning. Okay. Open Arts Ministry, I think you got your answer. I mean, try to avoid this type of. I'm not telling you to avoid the entry. I'm telling you to avoid that narrative that market will go lower. If you see this type of price action, which is actually below the both line and it is very clear, then you can that you can I mean adapt that idea that market will go lower. I think it's clear, brother. If it's not, let me know. I tweeted the chart. It moved. The fair value didn't go for the breakaway gap target clean equal loss. Yeah, Hardik, when you tweeted that, then I actually opened my chart to my phone, and actually I took that entry depending on your screenshot, brother Hardik. When you gave me the screenshot, I actually planned my trade after actually depending on your screenshot, brother, because I wasn't able to look the full price through my phone. It's very difficult to analyze this through my phone. So that's the thing. Thank you, brother. Actually, that's why I was asking what the price, I mean, the price condition. And really, thank you. This formation is classic twist low of the week. It can't take both sides. It becomes Wednesday low of the week. Consider Thursday reversal. No, no, not Thursday reversal. I mean, oh, And I'm still a little bit confused, brother. Can you just clear the question again? I'm really sorry. I didn't get your question clearly, brother. Hmm. Please get brother. Quick question. Okay, Open Heart Ministry. I hope I gave you the answer. Monday price stay inside Friday range. That's right. Tuesday price peak Monday high and low, high and low. Wednesday price take Tuesday high, low and expand, low and expand. Yeah, that's the matter of Innova. Until now you are right. Wednesday price continue Tuesday. No, Wednesday price won't continue Tuesday's move. That is wrong. Thursday price will continue Wednesday's move. Okay, I think you mistakenly write it down. Thursday move price is actually continuous of the Wednesday's move. Friday come inside Tuesday diligence. No, Friday is it will come back again into the range, whole range. Okay, from the highest high to the lowest low until Monday to Thursday. So that should be Friday's. Friday will come back. Friday will go back into the range. You will see where what is the highest high from Monday or Sunday to Thursday. You have to mark the Sunday to Thursday highest high and the lowest low. When you will mark them, the both level, and Friday you will expect price will go back into the range. So that should be your expectation in Friday. And 50% previous week and opening help us to read the price. That's the thing, brother. That's the thing. Market cap the week. Yep. Hardik, did you trade in top step or no, brother? I told you that I am outside and I didn't have my laptop. Even I couldn't place my stop loss properly. If you saw yesterday's video, I took a loss near about 2,600 something in paper money. Okay, I took that loss because I couldn't move the stop loss fast. I didn't know how to move the stop loss. So later I actually fixed that and I moved my stop loss. I didn't take my entry to my top step or FTO mode nowhere because I was in my phone. Please, can we let him teach? Yeah, given Jen, I I'm not teaching you, brother. I'm just sharing my understanding. Okay, because Tuesday have to take both side up and down, but in this case didn't take both. So it become Tuesday low of the week. Things for me. No, Apostolo. I mean, you have to do your weekly analysis first. I mean, in Saturday or Sunday when market is closed, you have to do your weekly analysis. You have to be sure that where market will go this week. Okay, that should be your that will be your first job to do. When you will know that this week we are expecting the lower run. Like yes, last week we were expecting lower run. This clean sell side was our target. If you remember, I did this in front of all of you. I mean, in live, I was expecting market will go lower toward this sell side liquidity. Okay, so that was my, I mean, expectation. That is my bias, weekly bias. This is my weekly bias. Remember, guys, this is my weekly bias. How do I use the weekly bias? If I take a entry and that is sell entry, short entry, I will go with my full potential. If I my maximum lot size is five contract, I will use five contract when I will see some kind of short. If I see some kind of buy, I will use one contract or two contract because that is against my weekly analysis, weekly bias. Okay, so from weekly bias, when you are sure market will go lower toward this sell side liquidity, this is a very clean low. It will go toward this liquidity. Now in Tuesday, you will expect that market will make the highest high. I mean the high of the week. That should be your expectation. Now this high is from Monday. Look, so Monday actually we got the high. I mean the high of the week. It failed the manipulation. It has to take the buy side liquidity first, then it should go lower and take the sell side liquidity. Instead of that, it went lower and take the sell side liquidity, and it failed to take the buy side liquidity. That means in Tuesday's price action is now telling us rest of the day or week we will see some kind of consolidation or more manipulation or something. Is it understandable or not? Let me know. Okay. So if we saw the highest high of the week from Tuesday, because our weekly analysis is telling us market will go lower, we want the high of the week from Tuesday. If we get the low from Tuesday, we don't care, because we know market will break this low, as our expectation is market will go lower. So this low is not important. But if we got the high, then we would see some kind of clear price action over here. See what price did in Friday. It never went back to the range again. Instead of that, it went lower. It even didn't make the PO3. Most of the time you will see, let me show from here. Look at every candle. Just look at every single candle. Okay, from here. It has a week lower, it has a week higher. It has a week lower, it has a week higher. Week lower, week higher. Every candle. Most of the time you will see week on both sides. Now look at this candle. It doesn't have any week lower. That means it is some kind of different thing. 90% candle you will get weak. Sometimes you will get some kind of this week. That means it didn't follow the PO3. Open manipulation, sorry, open accumulation, manipulation, distribution. It will come back lower and it will close over there. Okay? Open accumulation, manipulation, distribution, come back again to the range, closed over here. That should be the perfect candle. 90% time you will see this perfect candle, but sometimes you will get uh, 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 you will get this candle as well. No open accumulation manipulation, just open and expand. Just think this is a weekly candle or daily candle. Okay, just don't think this is 15-minute candle. Just think this is weekly candle or daily candle. Okay, just open, expansion or distribution, no manipulation, no accumulation. But look at every candle, you will see over here. See, this is another candle where there is no manipulation. So sometimes you will get this type of candle what we got from this week. This weekly candle, we didn't get the manipulation, we had no manipulation. Let me go to the weekly candle. Okay, I will go to the weekly. From weekly candle we can see it opened here, it went higher. All of this high run was in Sunday and Monday. Okay, all of this run Sunday and Monday. Tuesday also it went little bit higher, but it failed to take the buy side liquidity. Instead of that, it went expand lower. Wednesday, Thursday, Friday. Remember the thing which actually we see 90% of the time. I think it's clear, brother. Okay, so many questions. You told us Tuesday have to take up. Yeah, so it becomes Tuesday low of the week. I got you. If it had taken both, it changes formation in Wednesday formation. It will change 100%. I don't know, but most of the time we see that precise price action. Okay, if it has done like that way, most of the time we saw the precise price action, brother. Yes, I called it Tuesday low of the week, but Mr. Michael, is that formation can Monday or Tuesday? I an apostle, I don't know how did Michael taught you this, that you will get Monday or Tuesday. But in my opinion, I got that you will get this in Tuesday. Most of the time you will get this Tuesday. This also I also learned from Michael. I didn't learn from anyone else, not even from his student or someone. So I don't know how do you get this Monday or Tuesday. In my opinion, so far I remember, I will get Michael told that you will get this from Tuesday. Most of the time you will, he never, I don't remember, but so far I remember he never talked till that you will get the highest high in Monday, because Monday is the accumulation phase. We are not expecting the high or low in Monday. Okay, so I don't know. I never heard it. I'm sorry, maybe I didn't know. After that, please give some RDRB examples. What is R? Did you guys give me a like? If you don't give me a like, I will. I will. What will I do? Give me a like, brother. Please don't forget to give me a like. I deserve a like. See, I did a journey near about 6 to 7 hours. After reaching my home, my mother was actually. I mean, she helped me to eat. I didn't eat my by my hand. He feed me by her hand, and I was just making the thing I will talk about today. So just I was making that. Then after that, I started to talk. I mean, started my life, and I didn't even take my shower. It's like 10:42 at night, at midnight. After completing my streaming, I will take my shower at midnight. So see, guys, I deserve a like. I mean, you should give me a like. And if you are new, you can subscribe to my channel. So it's all bullshit. If you subscribe, then maybe you will be bored as well. My advice is don't subscribe me. And guys, I forgot to tell you that I'm what should I do? I don't know. I mean, what should I tell? I don't know. Just because I saw that I got near about, I mean, more than 2,000 people in my channel. I mean, subscribed. More than 2,000 people have subscribed to my channel, and it's really unexpected. I didn't expect that I will get 2,000 subscriber or something like that. I'm really honored, guys. I don't know what to say. Hmm, I'm really honored. 2.04 subscriber. Okay, I'm really honored by you guys. You guys give me so much love. I'm really happy. Thank you, guys. Thank you for supporting me and loving me this much. Thank you, Abhinavo. What do you make? Thank you, brother. Uh, so it's 2.04K subscriber, and I'm near about 3,500K. I mean 3,500 watch hours. So near about 500 watch hour. After that, it will be monetized. What to do after monetize? If you have any suggestion, you can give me to my Twitter so that I can know what should I do after it is eligible for monetization. I have really no idea about this and nothing. I asked help from Obinabo for my thumbnail. You see, I use some kind of awkward thumbnail, and you see, earn millions of dollars. This concept also got from Obinabo. Obinabo actually tell me to use some kind of this type of title. But actually, what I'm just teaching you. It is from you will get it from my live streaming, and in my videos you will see something. Actually, if I take some action which is really, if I mean absent to tell you something, and later I saw it happen, then I will make a video and I will put it in my YouTube channel. Okay. So you are providing value, except expect many more people to subscribe. Oh, brother, you are asking many more people. I'm really happy. Even I couldn't believe that 2.04 subscriber. Oh man, seriously, it is unexpected for me. To be honest, it is unexpected for me because people actually love to see watch actually entry, something entry or signal, something like that. Okay, but which I will never provide you. I will show you how to take entry, how to do price action, read price action, everything. And that part is really so bored. I mean boring. So most of the people actually don't like the boring part. They want the entry pattern, okay? And which is nearly impossible for one person to be a professional trader. If you don't know how to read the price, how to how to predict the price in a specific day, you can never be a professional trader. Never ever. If you don't believe me, just write it down to your notebook. I will never be a professional trader if I don't know how to expect price in a specific day or in a specific session. If you don't know that, you will never be a professional trader. If you don't believe me, write it down. So most of the people, they actually don't like these things, the, the boring part. Instead of that, if I show you like over here, okay, let me show you. Oh, okay, let me go over there. Just a second, okay, I will go. My internet always. Thank to you, that no problem, Abhinav. Thanks, mate. Thank you, Carlos. So here is my Nasdaq, and I will show you. If I show you these things, I will get more, more subscriber. Trust me, I will get more subscriber. Look at this price action. Yesterday I took this entry. If you remember, I took this entry. What what actually I saw over here? Why did I take this entry? This was the 1 minute chart, and look, after one, it went higher. Okay, when it went higher, this is the last fair value gap. This is the thing I'm teaching you guys every day. I'm teaching you this. Look, sorry. So when price went higher, this is the lowest fair value gap where price should hold. Okay, I marked the consequent encroachment of this fair value gap, and I saw price went lower. I mean, it it went lower. Okay. In the meantime, I saw this clean equal lows. If you go back, you will see there is another low at the same level, 14660. Okay, this is the low. I mean, if you go back, you will see there is another low over there, and it is the clean lows. Price went higher, came back to this fair value gap, went higher again, failed to take the buy side liquidity. Look and try to understand very beautiful. I mean, very careful. Okay, I will go back over here and I will tell you why I took my entry over there as well. Okay, it's time to talk about the entry. So this is the 15-minute fair value gap. I was expecting that market will, I mean, it rejected from the consequent encroachment here. This is the 15-minute fair value gap. Ovinobu, yesterday you asked me, don't know, again, you asked me what fair value gap is it? It is 15-minute fair value gap. Ah, no, I have the net. Yeah, I know. So this is the 15-minute fair value gap. This is the last fair value gap. I mean, it's the breakaway gap. Look over here. So this is the 15-minute fair value gap, and I got the rejection from here, from the consequent encroachment. Okay, guys. When price went below this low, look, it has closed below the fair value gap. It went back to the consequent encroachment. Maybe not tick by tick, but I will expect, I mean, I will see this as a rejection from the consequent encroachment. You will wait for the perfection. You don't need to go with the expectation. Okay, you will go with the perfection. It rejected from the consequent encroachment, then got this run. It failed to go back to the lower part. It failed. Look, no candle could reach over there. No candle. Okay, so why, when price actually came back again here, this is the lowest part, I should take my entry over there. My stop loss will be above this high, so it will be a highest high. I mean, if I take my entry over there and I put my stop loss over there, can you imagine how much people will be the I mean the stop loss? It will be huge. Okay, so I didn't take my entry over there. I was waiting for the what actually market would like to do. If it would like to go lower, I will take my entry over there. So when I saw this run and that was the breakaway gap, price came back again to this gap perfectly. It is rejected from there. What it should go, where it should go? It should go above this high to take the buy side liquidity. But instead of that, it went lower. It went lower, gave me the market structure shift. Look over here. It gave me the market structure shift over here. I'm not telling you to take this entry. I'm just showing you why I took this entry, specifically this entry. Okay, you will do this later. Right now, please don't take risk. That is my only expectation from you, that you won't take this type of entry. You will wait for the perfect entry. I gave you the perfect example as well. Okay, every time I give you a perfect example, so you will wait for the perfect entry. But if you don't get the perfect entry, you will avoid that entry. So when price actually failed to go higher, take the buy side liquidity, instead of that it went lower and gave me the market structure market structure shift. It went higher again to this gap. Look at this gap. When it went over there, I took myself. In the meantime, I saw market went lower to the break even, the consequent encroachment of this gap. It went lower of that gap. You don't see like that way, but I can see perfectly. Whatever I'm seeing here, I told you already, but it is difficult for me to give you the perfection. Right now you have to go with the perfection. Later you can take this type of risk. Right now you are not ready yet to take this type of risk. Okay, so it failed. It actually went below the consequent encroachment and it started to go higher. So here this candle I took my entry. Specifically this candle I took my entry. I put my stop loss above this high. You see this swing high above this high. Actually that high wasn't my uh, I didn't want to put my stop loss over there. I wanted to put my stop loss below this, above this consequent encroachment of that week. Let me show you everything. Okay, I know it is little bit confusing, but I'm just telling you, later you will do it. All of these things I will teach you. So I actually wanted to put my stop loss over here, somewhere here, but I don't remember where I put my stop loss. I so far I remember I put my stop loss over there. It's because I was over here somewhere. I don't remember exactly where I put it, but the thing is I was thinking I will put my stop loss above this consequent encroachment of that week, that specific week. Okay? And you see market actually went, when it started to go higher again, I marked the breaker. I wasn't able to mark the breaker because I'm using my phone. I'm telling you again. So I just put a hot level blue line over there, and I told you later that is the breaker high. So that was the breaker high, low, higher high. So that was the breaker. Price shouldn't go above the breaker. Okay, and I'm just clearing this gap because there will be so many gaps. Also I'm clearing this so that it will be easier for you guys to see. So if price go above, it shouldn't break the consequent encroachment of that fair value gap. Every week is fair value gap. Every week is fair value gap. That is the highest swing high inside all of this price action. So I marked that on as my uh, what can I say, the consequent encroachment of that week. In the meantime, there is another level. Why I marked that level, if you ask me, this is the order block. So all of the thing you have to understand in 1 second or 1 minute. You have to look everything over here, what you have over there, to take that short. I first I was thinking market will go higher. Market will go lower. It will reject from the lower part. Why? Because it was rejected from the consequent encroachment. Now it should come back to the lower part of the fair value gap, breakaway gap, and it should go lower. Instead of that, it went higher. Oh, stopped over there. So this gap. somewhere here. I don't remember. Maybe this in this specific. Yeah, I took my entry to that level. If you just go again, I took my entry to that candle exactly that candle, and I couldn't move my stop loss, so I put it over there, and I marked this sell side liquidity. If you see this low and this low, they're relatively equal low. So that was my sell side liquidity over there. So I put my stop loss over there, but I was stopped out. It's because I couldn't move this one. I wanted to put it above this highest high, but I failed to move this one, so I took my stop. I mean, I was stopped out at that was 2600 or something. I'll talk about that one. So when price came back again, went higher, failed to take the buy side liquidity, gave me the market structure shift to the lower part. Okay, it failed to go higher, take the buy side liquidity. Instead of that, give me the lower market structure shift. What I am doing. I am doing nothing. I have nothing over here. So far, I know market will go lower. Why it will go lower? I have this sell side liquidity. I have this clean sell side liquidity. I have two sell side liquidity. Very clean sell side liquidity. Okay, I am expecting market will go lower. In the meantime, my price is rejected from consequent encroachment. So it should be trade the lower part and then it should go lower. When I saw this market structure shift, I got this very nice fair value gap. Very nice fair value gap. This is the fair value gap. Okay. And when it is inside this fair value gap, just let me show you. Nothing. I am not sure yet. Now I saw this candle. It closed below the consequent encroachment. Maybe a very little bit. It is showing that it is perfectly rejected from here, but yesterday, trust me, I was watching from my phone and I saw that it actually closed below the consequent encroachment. I'm sorry, but I don't know, maybe my fault or something. Whatever, very next candle, it actually closed below the consequent encroachment. The very next candle, it closed below the consequent encroachment, but I saw that one also closed below the consequent encroachment. Maybe that was my problem. I'm very sorry, but very next candle, it went below the consequent encroachment, and there was another body. I mean, the you will see open body that actually opened below the consequent encroachment. So in that candle, actually, I got confident market will go lower. So I took my short over there and I put my stop loss maybe somewhere here. But I told you why I wanted to put my stop loss above there, whatever it is, and I targeted there. If you remember, okay, I targeted over there. Now, what price actually did? I know you guys are boring. So it actually went lower, higher, whatever it was trying to do. When I saw this candle actually went higher, actually going higher, I was thinking why it is going higher. Then I find out this breaker. I saw there is a very nice breaker. So I was sure, I wanted to hold the price by the breaker, and it actually perfectly hold the price. So a wick went higher, but I don't care about the wick. I care about the bodies. So bodies were inside the breaker, and price actually started to go lower. Over there, I took my first partial. Then I was waiting to take this low. I mean, if you remember, I was wanted to, no, not that low actually. I was wanting to take this low. Sorry, not that low, this low. So when actually price was over here and it failed to take that low, I closed my trade entry and I posted that I didn't close it because I saw the higher run. Actually, I closed it because I need to sleep. So I didn't afraid of this higher run because I know it is going higher to take the buy side liquidity. After taking the buy side liquidity, it will go lower again. Why? Because it is just before the macro. So macro, whatever it is, so it will go higher and take the buy side liquidity, and it will go lower again. And if you see, it is actually taken the buy side liquidity here. It has taken the buy side liquidity, went above this high, take the buy side liquidity again, and Just consolidate over there, then it went lower. I mean, little bit consolidate. Um, whatever, and that was the trade actually. So I will never hold this type of trade, but I took this on to show you that if you would like to take this type of entry as well, you can do it. But in my opinion, I will take my entry over there. I will I will out from my entry over there. I won't hold my trade until here to here about 36, 35 handle man. It's not a small move, huge man, huge. If when you will start the live money trading, you will understand 30. You will be happy if you get 9 handle or 10 handle. Trust me, brother. You will be more than happy if you get 10 handle on. Only 10 handle, you will be the happiest person of this world. So in that case, if it is 35 handle, you can imagine what it is. So and there was another actually entry over there. I don't think so. It's a good time to explain that one because you guys are already, I mean, bored. How do you differentiate between liquidity sweep and MSS? Brother, liquidity sweep and MSS is totally, I mean, how do I how do I do that? It is the thing you have to understand the price action. I mean, if you read the price from here and you are expecting that market will go lower, any above run will be liquidity sweep. And any lower run which actually gave me the market structure shift will be my market structure shift instead of the uh, sweeping the liquidity. Okay, so I mean, it depends on the price action. How did you read the price from before? If you read the price from before very clearly, you will understand whenever it is going higher, it is actually clearing the buy side liquidity, and you will wait for the market structure shift to the lower part. And most of the time, when it will sweep the liquidity, you won't see this type of nice fair value gap. You will see some kind of sloppy price action over there. Okay, not every time, but most of the time price actually sweep the liquidity, and in that case you will not get the fair value gap. Okay, something like that. It depends on narrative or bias, brother. Narrative is one thing, bias is another thing, price action is another thing. I mean, reading price is another thing. Narrative is how actually today price will react. This is narrative. Bias is where price can go today, where price can go, that is bias. How it will go, that is narrative. Where it will go, that is bias. Price action is to my narrative, is it going to my bias? If it is going to my bias, how it is going over there? Is it taking the sell side liquidity already, then give me the market structure shift, or it is just going above without taking the sell side liquidity, or it is going lower without taking the buy side liquidity? That is price action. Where price will go, that is bias. How it will go, that is narrative. And when you saw your bias is correct with your narrative, now you will start to read the price. What is it actually doing? It is actually, I mean, leaving some liquidity before, I mean, to your back, or it is actually cleared the liquidity, then it is started to go lower or higher. That is price action, reading price action. Okay, given then, is it clear, brother? Okay, okay, no problem. So you guys are learning, and you will forget me soon. Okay, how do you differentiate between liquidity swap? Okay, Abhinav, understand this entry little bit because breaker and order block is not clear. Yeah, but breaker order block, you don't need breaker and order block. I talked about the order block and breaker because of my stop loss. I mean, where I should put my stop loss. If you see, if you took the macro entry, I told you that I put my stop loss above this high because there was no breaker. You remember? I don't remember who is entry I was talking about. I think I took that on. What did I talk about that? Maybe somewhere here. Yeah, yeah. Macro, right? I talked about this macro yesterday. That was the macro. This is for you guys who actually don't like macro. For you, it works, man. It works every day. If you don't know how it works, it's your fault, not mine. So when price came into the macro, it started to go higher. When it started to go higher, what does it mean? It is actually clearing the buy side. So I saw it has cleared the buy side liquid. Abhinav, I'm giving your answer, okay, brother. I mean, just watch this first, then you will understand. Okay, you don't need breaker or order block to take a perfect entry. Breaker, order block, all of these things need to put your stop loss, not for entry. I mean, if you think. Then when price went higher, more higher, I marked this high as my buy side liquidity. So I got my buy side liquidity taken when price are inside this macro. Then it went lower. Is there any market structure shift? No, there is no market structure. It started to, I mean, go up again, and then this breakdown. Okay. When I saw this breakdown, you see this breakdown, this low is taken. That is my market structure. Did the market structure shift happen inside the macro? Yeah, I got my market structure shift inside the macro. Did I get my liquidity taken in the inside the macro? Yeah, I got it. Where is your fair value gap? There is your fair value gap. So that is your fair value gap. So where you will take your entry. You will take your entry over there. Where will be your stop loss? I have nowhere except this high or this high. The best is to put the high over there because there is no order block, there is no breaker, there was nothing. When I got nothing over there, I have no chance to put my stop loss above the highest high or any other place. Okay, so I had no choice. And where should be your, I mean, target? I'll just put it over here. Okay, it's 22, 21 handle, but you will go for 20 handle. Okay, so when price came back to the fair value gap to this specific candle, that candle price came back to the fair value gap, and what time is it? 15:16. I mean, within 5 to 6 I mean 4 to 5 minutes I told you, but it actually went to the 6 minutes. So 1 minute is merciful. Okay, so you can let price sometimes go 1 minute before, on minute after, you can do it, brother. So actually you are on the market, price never go above this high. Why I put my stop loss over there? Because there is no swing high, which is which I can I mean use for putting my stop loss, or no breaker, no order block, nothing. So I had to put it above this high or this high, 20 handle. That was your macro. But what will you do this type of case? You will avoid this macro because it's very big. I mean, it's very big stop loss. If you see this type of stop loss, you will avoid that. Simple, brother. You will get another chance tomorrow. Not like today it will happen and it will never happen. It's not like that. Okay. So okay, understand this entry little bit. Okay, I hope it's clear, Obinabo, about breaker and order block. Breaker order block, it's really important for putting my stop loss. I don't use my entry because of order block. I love breaker for my entry, but breaker you need more time to understand breaker. You trust me, brother, much more time to understand. You will get so many videos in YouTube. I'm not telling you that, guys, you won't get the videos. You will get, but after watching that, please come back to me and tell me, is it working inside the chart or not? Okay, I mean, at least 70 to 80%. It has to work at least 70 to 80%. Okay, because breaker is something that should work for 95%. 95% of the time it should be worked. Breaker is something like that. Okay, so after watching all of that breaker video, let me know that it is working inside the chart. the 80 to 90%, or I don't care about 80 90. Just tell me that, bro, it is working 50% time. Just tell me, just show me the evidence that it can work 50% of the time, but you have to mark it before price printed on the chart, okay? I have never seen someone explain breaker very carefully, I mean fully, okay? Uh, and whatever I'm just explaining over here, if it is not explained by ICT, that is my understanding of the market. So don't think I'm the wizard or boss or something or goat, whatever. I'm nothing. I am nothing. I know nothing about price action. Trust me, brother. Nothing about price action. I'm just I just understand little bit about the market, and that's the thing I'm sharing with you guys. If you rush, I will stop, nothing else. Because I can't give you everything all together. If I do it, it will harm you. And I can't harm you because later you will come back to me and you will tell me, brother, you knew that we can't take all of the things all together, then why did you give us that? I'm giving you fair value gap. It is not clear yet for you guys. Trust me, it is not even, you didn't get 10% to 20% yet of the fair value gap. And now if you ask me about the breaker, how can I give you? Because fair value gap is something that is the base of this ICT concept. If you really don't know, I needed near about uh, 6 to 7 months to understand fair value gap. Trust me, brother. Just 6 to 7 months. I don't remember, but not less than 5 months. More than 5 months, I needed to understand fair value gap. Only the fair value gap. You even don't know what is the meaning of fair value gap. Yesterday I explained though what is fair value gap. It is the gap which has the value and that value is fair. That's why that is fair value gap. There are some gaps which is not value. I mean not fair. This this gap is not fair. That's why it is not fair value gap. It's just a gap, not fair value gap. Why ICT called this as fair value gap? Why did he call it fair value gap? Why didn't it he called it another name? Why it is fair value gap? Because this is fair. This is non-fair, unfair. This is not unfair, okay? It has a value. It is not valueless. It has a value. That's why it is fair value gap. This is not fair value gap. This is just a gap. You even don't know what does it mean of the fair value gap, and you guys are rushing. If you just rush, brother, teach me what is water block. But I'll never teach you water block. To be honest, if you get angry on me, you can leave. I don't care. But I will never talk about water block. To be honest, but I will give you breaker. I trust me, brother. I will give you breaker. I will give you proportion block. I will give you rejection block. I will give you what I will give you, brother. I will give you what else I will give you. Let me remember later, okay? But right now, fair value gap, try to understand it clearly. Trust me, brother. Every day. I mean, I have just gave you the breakaway gap. The first gap, the second gap, breakaway gap. You if you can use the breakaway gap clearly right now, if when you will come to me, I will poll on my Twitter. If you guys just I'll just write a tweet on thing, and if you give me that answer, brother, we understand fair value gap, then I will ask you, I'll take an exam, okay? Don't mind, please. I know some of you guys are very, I mean, you know much more than me, okay? I'm not telling you guys, I'm telling someone who doesn't know. I'm telling you, okay? I'll take an exam of you guys that you understand fair value gap. Then I will move from fair value gap. I am giving you the first stage of the fair value gap. If you remember, 1 week ago I talked about this, how every specific day we will expect the price. That was the introduction. Today I gave the second step. I went to the second step. I hope it is clear for you guys, but it is little bit tricky, right? It is little bit difficult. I mean, first week you what did you think? Okay, that is the narrative, that is the thing. You understood this. This week I went to 15-minute chart from weekly chart, daily chart. This time I went to 15-minute chart. Now, when I will go to the 1 minute chart, it will be little more difficult. But if you really don't understand from the daily chart, how can you understand from 1 minute chart, brother? It's very difficult to understand. If you don't understand this, I will be, I don't know what to say. Okay. So many question again. I will just go with it. Can ask you about an entry that you took on 16/10/2023? 16/10/2023. Abhinav, I am a very busy guy. I don't remember even the date. I mean, which entry? I don't remember anything about that entry, brother. Just message me to my Twitter, okay? I'll try to give you the answer. Given then it depends on narrative and bias. I give you the answer. An apostolo, the breaker you use for the entry. How can an apostolo? Why you just I mean unsend the message, brother? Every time I saw that you give me a message, then you unsend it, or you comment something and then I mean delete it. Don't do it, brother. No, okay, I get it now. Thank you, brother. No problem. Obinobo, without breaker and order break, it's clear. I think it's clear right now, Obinobo, why order block and breaker is not important. That is important because of the stop loss right now for you guys. Quick question. I use the same model to look for entries, but I'm struggling to know found valuable zone where the possible market structure would happen. There is no zone for market structure shift, Carlos. It can be happen anywhere. I mean, the market structure shift can happen anywhere until the sell side is taken. If you see the sell side has taken, after that you get the market structure shift, that is not valid. Until it is not taken, the sell side is not taken, market structure shift is valid. Okay. And if you are confused about the market structure shift, you just go to my, I mean, you are maybe today is your, no, you are not new, Carlos, you are here before, so you already know. To my channel, you will go to my playlist, you will see how to avoid losing trade, you will get every information about the market structure shift. Okay, brother? So it will help you to avoid thousands of losing trade. I'm telling you this again and again and again. I need to learn first fair value gap. Yeah, that's the, I really want all of you to learn fair value gap, because if you learn fair value gap and I quit this channel, you will never need anyone else to trade, to be honest, brother. So far, if you just can understand the fair value gap, you will need no one else, no order block, no breaker block, nothing. So try to understand fair value gap first, then the second thing, domino effects. You need to rewatch this because of my internet problem, domino. ICT private content. No, Hardik, it is not ICT private content. To be honest, brother, ICT, whatever ICT gave us to the YouTube channel freely, it is diamond, brother. Yeah, we get something from his private content, I mean private channel. But in my opinion, comparing with the private channel, I mean private mentorship, he has given us diamond. You can say Kohinoor in the YouTube channel, brother. To be honest, but it's little tricky. I mean, it's not little tricky. It is the highest level tricky things. So that's why people actually don't get his concept, and it's difficult for them. Okay. Jonathan, okay, no problem. You will send me. I will try. Okay, I'll try to give you an answer. I'm sorry, I switched for better question. Oh, okay, okay. Then it's okay, brother. No problem. Sorry. If it is for the better question, then you are welcome. You can delete. No problem, brother. I thought you just delete it. Why? You got angry on me or something? Alright, thanks, bro. No problem, Carlos. Just watch that video. Then I hope market structure shift will be clear. Okay, and for market structure shift, there is no zone, brother. Again, there is no zone until the sell side. If you are waiting for the lower market structure shift, you have to mark some kind of liquidity first. If you have the liquidity and you saw the liquidity is not already taken, then the market structure shift is valid. But if you see it has taken, that is not valid anymore. Okay. Yes, I tried to watch 2016. That's really hard to understand. The charts are empty for 2020 is good. Yeah, brother. Hatik, you're true. Right. Even the content here, ICT explained in YouTube. This is also very tricky. Okay. Yeah, sure, sure, Carlos. Sure, you can. Anyone can PM. I public it. I mean, I previously I closed the message, but I public it because so many of you has some question or something, so I public my message. I'm very sorry for my broken English. So what I was talking, Hardik, even if you think about the 22 YT model, it's just a model, just a model. You can't just wait, huh? From here. Okay. It has taken the buy side liquidity from here. Okay. Then relative equal high, it went higher. It has taken the buy side liquidity again. It gave me the market structure shift over here. There is a fair value gap. It didn't work. It went higher again. There is just think there is a market structure something. You will see most of the time. What do you see? You will. How do you know from where it will reverse? If you just think about the 22 YT model, okay, just think like that way. It went lower, it went lower, and it has taken the sell side liquidity from here. This swing low, it has taken the sell side liquidity, gave you the market structure shift. This is a very nice fair value gap. You has had taken the buy here, but price never go above the buy side liquidity. Instead of that, it went lower and you are stopped out. How do you know market will go higher from this fair value gap? How do you know? It's very easy to understand the model, but it's very hard, very difficult to put that into your chart. How do you put that? When you have this level, what is this level? This is the 15-minute fair value gap. You can see the breakaway gap, okay? You have this level on your chart, and you saw market actually went through this fair value gap, rejected from the consequent encroachment, and it went back to the lower part of the 15 fair value gap. Now you can expect it should go lower. You go to 1 minute chart, okay? You go to 1 minute chart and you started to read your price. Okay, so market should go down now. I should look for a MSS now, market shift, market structure shift now. Now when I got this, it should work most of the time. If you look like that way, you can be a profitable trader. Now if you don't know how to mark this gap, this model is useless. I mean, you will never understand how you will use this model on your chart. Okay, I'm not dominating anyone. I am just telling you the fact. This is all the thing I faced in my life. I struggled to learn these things by myself without any other's help. Okay, so please don't mind, brother. Uh, exactly. That's why it's really hard. That's why I can trade. Yeah, don't worry, brother. Just stay with me. Give me some time. I will teach you everything, brother. It's very easy. I mean, it's the easiest thing in my life I have ever learned. Okay, trading. Trading is kind of my passion. I love trading. I mean, I can't wait to sit in front of my chart. So right now I am little bit confused. What should I do? Because uh, man, I'm just spending my time with you guys in live streaming every day, and it's really hard for me to take the entry. And last day, if I share or not, I don't remember. I took an entry in my FTMO, and later I just got $20. To be honest, $20. I mean, $90, 70 cent or 50 cents, 60, near about $20. Okay, I just got $20, and it's. Do you know why? Because I took my entry and I started my live streaming. I maybe I forgot to share that. I started. I was planning to start my live stream or something. So I closed my. I mean, I put my stop loss near about some with some profit. Okay, so near about $20 something. I don't remember what day it was, but only $20. So it is very difficult for me to. I don't know what to do, but I really want to give you guys something so that you guys can do it by yourself. So please try to understand this fair value gap. If you're new, please give me a like, but like please, because it is all everything I need from you. A like, some comment. Yeah, obviously I need appreciation, and because I'm a human being, I really need some appreciation from you guys. I'm doing hard work, to be honest. You believe it or not, I'm doing hard work. After this big journey, I just come home and open my channel, I mean the streaming, and started to talk to you guys. It's very hard, but I'm doing this so that I can get a stock market, I mean close market, and I can explain everything clearly how you expect every specific day. Okay, so that is the thing, guys. If you don't appreciate it, maybe it is unfair. Okay, it is unfair value gap, not fair value gap. It's unfair value gap. So look at over here. I would like to show you this one as well. Actually, I was watching this one, and I don't know why I was watching this one, but I was watching this. I don't remember. Okay, so that is relative equal high, and it has taken. Guys, it's very confusing for you right now, but later you will understand how beautifully it works. This high and this high, they're relatively equal high. Market has taken the relatively equal high, gave me the market structure shift. Let me remove this one. And you all know this is the level I tweeted 14,660 yesterday. Okay, that was the level for my sell side. I got this market structure shift. Look at the market structure shift. There was my market structure shift. What time is it now? 3:25. That means the last hour. What is the last hour time? 3:15 to 3:45. If you get a setup into that time frame in Friday, that is kind of diamond. Okay. After this market structure shift, there is two fair value gap. Where is your two fair value gap? This is your first fair value gap. And what I was talking, let me remind later. Okay, because I already forget what I was talking about. And that should be your breakaway gap. Now, where should be your entry? Let me. Where should be your stop loss? Just above, just above the breakaway gap. What does it mean? You will put your stop loss just little bit above? No, it will give the price. I mean, price to go somewhere over here. The best way is to put it above the fair value gap. Why? Because this is a very small fair value gap. Look, it's very small fair value gap. If you do it like that way, then it's a big huge fair value gap. But if you put it in a in a normal way, it's a very small fair value gap. So in that case, you will put your stop loss just above the fair value gap, little above the fair value gap. You have nothing to lose. Where should be your target? There should be your target. If you really fond of risk reward ratio, it's 1 is to 2.61. It's a very good risk reward ratio. I don't need to put it over here to make the risk reward ratio 1 is to 6.16. If it is losing trade, I don't care about the risk reward ratio. I will put my stop loss in a place where I won't be stopped out. Okay, just above the, because this is the small breakaway gap, I will put my stop loss above the breakaway gap. If it is a very big breakaway gap, I will put it above the consequent encroachment, not exact above. I will give little bit space to trade that consequent encroachment. If it is not clear, ask me the question. I will give you the answer. Okay. So that should be your entry, and this level is your target. Why this level? Because this is the clean low. I mean the cleanest low. The most clean low is this. Price is telling you I would like to go lower. It has taken the buy side liquidity from there. Look, it has taken the buy side liquidity from there. It has shifted the market structure from there. It went higher, traded the fair value gap over there. It went lower, gave you second market structure shift with very nice breakaway gap and the first fair value gap. All of these things is telling you, brother, I would like to go lower. I don't want to go lower higher from here. What is it? It is telling you, I want to go lower. So why you are afraid to take this entry? Where you have a very nice setup over here, very nice setup, and you have the cleanest liquidity over here. Don't think this is only one low. There is another low over here. I mean, let me show you again. I know you guys are getting bored or bored over here. Okay, this is the another low. I didn't put it clearly, so you can say it has taken, but it is not taken actually. It is very clean. I don't know. Yeah, very clean. And that is the actual level is 16,6 14,660. That was the level. So for that is a very clean sell side liquidity, and there was a very clean setup over there. Why you are afraid to take that entry when you know how to read the price from here? You are reading the price from here. It went through the breakaway gap. This is the 15-minute breakaway gap. All of you know how to mark this breakaway gap. All of you know. If you say me that bro, I don't know how to mark this breakaway gap, then you have just wasted your time because you didn't take your notes, you didn't do your homework, you didn't go to your chart and didn't mark all the level, you didn't do anything. So you have wasted your time successfully. Now you are just blaming me that you don't know how to mark this. It went through this breakaway gap from 15-minute chart. That was the breakaway gap, I mean the last gap. uh, so price should hold here and it should go higher. Instead of that, it went through this breakaway gap, rejected from the constant encroachment. Later it came back to the lower part. It should go lower and take the sell side liquidity. You are reading the price from here. When price rejected from the constant encroachment, we are expecting that price will go above to the, I mean to the lower part of the, but it failed to go to the lower part of the 15-minute fair value gap. Instead of that, it went lower and it didn't take the sell side liquidity. Instead of that, it has made the equal lows. It went back where the lower part of this breakaway gap. Now it has given you a very nice market structure shift with the liquidity taken. Look, it has taken all of this liquidity. All of this liquidity has taken by this candle. Okay, and then you get your market structure shift with a very nice fair value gap. You will take your entry over there. Where should be your target? Here. You will hold your end. I mean, trade until there. Never. You will look for some kind of liquidity level near here, and you will stop your entry over there. For any reason you have missed this entry, you will come back over here to the last hour, and you will try to look for another entry over there. It has taken the buy side liquidity. It has given you the market structure shift. That is your fair value cap. You will take your entry over there. Stop loss over there. Very long stop loss. No problem. Avoid that. Look what price did. It went higher again. Gave you another market structure shift with a very nice fair value cap here and here. Now the stop loss is small. Take your entry over there. Don't wait to trade price over there. Most of the time you will see price will never go to the upper, I mean this upper fair value gap. Okay, it will never go to this fair value gap. So take entry there. Boom, done. That level are the ones that I don't know how to count them. What level, Carlos? What level, brother? I really don't. How long will you do the live trade? I am doing live trading. If you ask me about the ICT concept, I'm trading 7, 8, 9 months. Yes, 7, 8, 9 months, near about that. Uh, yeah, something like that. Not 1 year, 9 to 10 months, I think. I mean, now I don't have the actually count. I don't have any idea about the time right now. I'm as busy as I don't have the time to die. Okay, I really don't know about time or anything. I'm so busy guy right now. You have no idea, brother. Makasi Gali. I think you are new, brother. Makasi Gali. Never heard your name. I watched your video about breakaway gap and went to into chart to study. When I saw that they worked, I smiled. Thank you, brother. No problem. So I deserve a like. Give me a like, brother. Uh, Carlos, the level you mentioned, the fair value gap on 15 minute, for example. Oh man, this is the thing I am showing. I think Carlos, you are new. That's why you are confused. Actually, don't worry, brother. Just stay with me for some more days. You will understand everything. So this is the level. Actually, when price went higher, this is the lowest fair value gap. Okay, look, this is the lowest fair value gap from 15 minute chart. There is no fair value gap below this fair value gap from 15 minute chart and fair value gap. Okay, when price is over here, we will mark some other fair value gap. Everything we will mark. Okay, later go and reverse. This is the lowest fair value gap. Until here, that is another price action. Another way we will mark this fair value gap. This fair value gap we will mark everywhere, every run. Okay, so when price actually came to this fair value gap again, what should our expect? If price would like to go higher, it should go higher from this fair value gap. Now this fair value gap is important for us. So don't worry, brother, you will learn this one because I think I don't know Domino, then Hans, Obinobo, and Apostolo, they are here still or not. If you guys are here, I think you guys already know little bit about how to mark this gap, right? If any of you are here, just let me know. Uh, so that is the way you will learn as well, brother Carlos. Just wait some more days because I will show you everything. I have already talked about this gap. That's why I didn't mention how it marked. I marked over here, okay? Because all of the things I will do from Monday if I get time and if I can continue my live streaming from Monday, you will understand how I started to mark a gap or a level, okay, or sell side or buy side, everything. How is I started to mark? So it actually the easiest thing you will learn. Don't worry about that. Just stay with me. I don't just go to the market and mark a specific level. I don't do that. I go market with you guys and then I mark the level with you guys. Okay. Even then ICT calls it an inversion fair value gap. Yeah, it is inversion fair value gap. I am also telling you that this is the inversion fair value gap. Look, I will tell you how it is very easy to tell like that way. Okay, don't mind. I'm just telling you the reason. Okay, see, there is a gap. Price went through this. So isn't it the inversion fair value gap? I'm asking you the question given then. Okay, this is a fair value gap. You have any confusion about this gap? This is a fair value gap. This is a fair value gap as well. I marked this fair value gap and I told you that it is important. I didn't mark this gap, and if you tell me that inversion fair value gap, in my opinion, this is inversion fair value gap, not this one. Now tell me why this is not inversion fair value gap. Because price went through this gap, it came back over this gap. How do you use this gap? Let me know, okay? Does breakaway gap work on all time frames? Yeah, obviously, Macaulay. Every time frame. Yeah, given then that's the thing, brother. That's why this I am actually showing you which fair value gap you will mark. Which fair value gap. This is inversion fair value gap. I just forgot to mention it the name that it is working as a inversion fair value gap. But what I am talking about how you will use this inversion fair value gap. How? Specifically how? If it is clear, then it's clear. If it's not, then it's not. But I am telling you which fair value gap you will use as a inversion fair value gap. How do you use the fair value gap? And how do you know which fair value gap will be important? There is so many fair value gap. Look at over here. One fair value gap, two fair value gap, three fair value gap, four fair value gap, five fair value gap. Which fair value gap you will use as your fair value gap? I mean, if you would like to use that as inversion or a normal fair value gap, which fair value gap you will use for that purpose. How do you know that? Anybody won't tell you. Nobody will tell you which fair value gap should use. I'm telling you which fair value gap should be used. I'm telling it every day, brother. Don't worry. When to use fair value gap? I fair value gap. Yeah, brother, Hardik, you have to stay with me, brother. I have already talked about this for last 2 to 3 weeks in my live streaming. And if I just tell you right now, you have to use this fair value gap, you won't understand. So you have to stay with me for at least 1 week to understand which breakaway gap or fair value gap should used as a inversion fair value gap or normal fair value gap. Okay? Because when I will go with the live chart, it will be my opinion is don't think about the entry. Whenever I am here in front of you guys, I'm talking with you guys, just forget about the entry pattern or entry or everything, because entry you will understand consciously, okay, unintentionally. You don't need to be learn this with intention. You will learn entry unintentionally. What you have to learn with intention is how to use fair value gap, with fair value gap, how to use breaker block, how to use price action, everything that should be learned intentionally, okay. And BPR net price bounce from his C. Yeah, that's the thing, Apostolo. I used that as a breakaway gap, and when it went through it, it used as a, I mean, inversion fair value gap. In the meantime, it is the BPR, I mean, balance price trends, and I use the CE. I think it is easy. So, given then, you have to go back, watch my live streaming, all the live streaming to understand that. Otherwise, you have to wait. I mean, you have to, come to my live streaming next week, at least next week. Then you will understand this, because it is to be honest, it is not possible to explain by one video, or I just can't tell you this you will use this one as your inversion fair value gap. I just can't tell you brother like that way. So just, if it is possible, then just join 1 week in my live streaming, and when you will get your information, you can just go out. It's up to you, but that will be easier for me and for you as well, okay, brother? Every time I talked about this inversion fair value gap so many times in my previous streaming, live streaming, so brother. So I think that's all for today. And if you guys got the point, I mean, the main theme was how to how to make your narrative. I mean, everyday's price action. How you will expect everyday's price action. If you have any confusion, please, I don't know what to say. Okay, but that is very important. Please try to take some notes. It is unclear what's this live stream. Oh, I know it's very boring. No need to worry all this. I'm really sorry, brother. I will come to all live streams, brother. No problem. Given them, I hope you will understand my concern, because I just can't tell you this. Look at this hourly fare available. Um, I'm just giving you an example. Look at this hourly fare available. I am expecting it will use either high fair value gap or a fair value gap later, but this fair value gap is the most important fair value gap for me. Now if you ask me right now why it is important, when I have marked this one, the price was over here, price was somewhere here, okay. In that time I marked that fair value gap, even I forgot why I marked that right now, okay? I forgot it, to be honest, I forgot it. I can't explain right now why it is important for me. Same thing here, I when I marked this 50 minute fair value gap. This one I remember because recently I have used this fair value gap, so I remember, because that was the last fair value gap before taking this sell side liquidity. Okay, all of this sell side liquidity before taking, that is the last fair value gap. So this should be used as a breakaway gap. And if you look at over here, if you ever see two fair value gap on above another, you will expect price will come back to the upper fair value gap and lower fair value gap consequent encroachment. It should be used as a breakaway gap. So this breakaway gap will be used later as inversion fair value gap. In short, that is the, I mean, summary of this gap. Okay, I don't know it is clear or not, but you have to come, brother. Otherwise, I'm not trying to hurt you, but to be honest, it is nearly impossible for me to tell you that how to use this gap. Okay, brother, I'm very sorry. Yeah, and Apostolo, that both, no, not both of them are inversion fair value gap. There is one fair value gap and there is one unfair value gap. I mean, there is one just a gap. I mean, the previous one just a gap. Let me just show you. This one is fair value gap, but this one is just a gap. It's not fair value gap. And if you ask me what is the difference between fair value gap and unfair, I mean, just a gap, I can explain it right now. It's kind of uh, inner understanding or something like that. Okay, so I can understand that it is just a gap and this is the fair value gap, and I know how to use this fair value gap. Maybe this fair value gap, this gap is also be used. I see knows maybe, but I don't know actually, and I really don't need to know how to use this fair value gap. Okay, I'm just, I don't bother about this fair value gap. I just think there is no fair value gap. So there is only fair value gap, that is uh, yeah, it's almost 12, brother. I have to go. I need to take my shower now, and and I hope you guys got your point. I mean, whatever I tried to tell you, you you got it. If you it is not clear, remind me later when I will be available in streaming. So that's all for today, and please don't mind if I tell you anything hard. I didn't mean that. I use the broken English. Really sorry for that, guys. So that's all for today. We'll meet again later one time. So cheers, guys. Bye bye.